Welcome to the Business Finance Bulletin, episode 190. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, zombie businesses on the rise, younger business owners more likely to look at alternative finance, and finding angel investors made easier. More businesses are classifying themselves as being in serious financial distress. Well, that's the findings from the latest red flag report undertaken by Begbies Traynor. This quarterly report for Q3 2017 has revealed that there are 448,011 businesses which say they are in significant financial distress. More worryingly, in terms of the increase, that's a 27% increase on the same period in 2016. So you can see that is quite a large jump. Now, more worryingly, of those 448,000 businesses, Begbies Traynor estimates that 250,000 of those are classified as zombie businesses. Now, what is this term zombie businesses? Well, zombie businesses are businesses that are literally just hanging on by their fingertips. They are in limbo land. They don't have sufficient cash or working capital to fund growth, and so they've stagnated. Many of them are also heavily indebted and so are vulnerable to increases in interest rates. Now, this report was carried out before the recent increase in rates, and whilst I don't think 0.25% increase is going to be enough to tip these businesses over, well, another increase may just do that. So what can you do to protect yourself from giving credit limits to these zombie businesses? Well, of course, it's doing your research, carrying out credit searches against these businesses to identify the ones that are heavily in debt, making minimal profits, perhaps have a history of late payments on other creditors. Those are the ones to watch out for. So keep an eye out for those zombie businesses. Let's move on now to access to growth finance. An interesting survey caught my eye carried out by Worldpay, the credit card merchant provider. They spoke to 1,000 business owners about their attitudes to raising finance. Now, interestingly, of those businesses they spoke to, more than half of them are planning to grow in 2018, which is, of course, great news. However, of those businesses which are startups or early stage businesses, 52% of them said that they thought that they would struggle when it comes to raising finance. And in fact, of those that have already started looking for finance, 30% of them said, yep, they did find it difficult. Now, the survey also identified an interesting age gap. Business owners aged 44 and below were more than prepared to look outside of the traditional bank finance, yet they were prepared to look at crowdfunding, peer-to-peer lending and all the other alternative sources of finance. Older business owners, older entrepreneurs really were just stuck on bank loans only. So if the bank said no, that would be it. They wouldn't look elsewhere. But of course, we know there are plenty of alternatives. So the message, of course, is shop around. Don't just default to the bank. Take a look at all the different crowdfunding, invoice discounting and asset finance facilities that are available. There's a lot more than just going to the bank. If you do have growth plans and you want to chat them through about the different sources of finance you may be eligible for, don't forget, just drop us an email, info@businessloanservices.co.uk, and either myself or one of the team will be more than happy to have a chat with you. Staying with the theme of alternative sources of finance, one growing source of finance is equity. Now, particularly among startups and high growth businesses, many of them are thinking, I can sell shares or equity in my business in order to raise cash. But of course, the problem for many business owners is, how do I get hold of potential investors? How do I get in front of them? Well, there are lots of angel investors out there. Now, angel investors are typically entrepreneurs who have been there and done that, got cash sitting there now, ready to invest into growing businesses that excite them and businesses that are looking for help and support and advice from them. But equally, they have a problem as well. How do I get in touch with businesses that need my cash and expertise? Well, there's a trade body called the UK Business Angels Association, and they've recognised this problem of marrying people up, particularly where perhaps angel investors have got smallish pots and want to co-invest with other angel investors. Well, what the UK BAA have done, they've established a platform called DealShare. Now what it is, if you're looking to raise equity, you need to find a member of that association who can introduce you to the association. You'll get listed on the platform, and then investors there will be able to see what opportunities are available, and they can club together. To get listed on the site, there's no fees. And deal size, are looking for a minimum of £100,000 up to a maximum of £3 million. So if you're in that space and you're looking for equity, just go along to the UK British Angels Association website, which is ukbaa.org.uk, and there you'll find information on how you can access that scheme. Well, that's it for another bulletin. As ever, I hope you enjoyed it. If you did, please don't forget to subscribe to this channel. Just hit the subscribe button and the little bell, and you'll receive notifications whenever we post new videos to this channel. Thanks so much for being with me. Look forward to being with you again next time. Have a great, successful and profitable week.